Hello and welcome back to the Sovren FX YouTube channel. As usual, we trade JJ and gold, and we're going to do a higher time frame analysis as we dive towards the lower time frames. I hope the volume is okay. Okay, so for JJ, we've been playing the higher time frame trend, which is bullish. We are also aware of the fundamental bias and the fundamental information advantage on JJ. That's why we have our uptrend and we have bullish JJ. So for entries, we had a medium term zone here where I'd look for reactions before I enter a buy, but for my main entries, I'm waiting for the retest or pullback all the way down towards 182.500. Sorry about that, a little technical difficulties. So as I was saying, we are in a bullish market, so all we do is enter breaks above the highs made and the pullbacks, breaks above and the pullbacks. That's what is happening towards New York session today. So we had a high made at 183 flat. Price failed to print new higher highs, then it's now doing a pullback to collect more buy orders for it to continue in the higher time frame bullish trend. Okay, so personally I have a buy limit at 182.500. This is where I'm expecting price to pull back to. So that's for JJ. A position here for say 13 pips stop loss, expecting it to blow its way up to 183 for 70 pips. So this is today's trade and this is what I am waiting for. Else price could break above 182.800 or 183 flat, but I'm not looking to enter within this range. So I'll most likely wait for a break above 183 flat, 183.200. So that's for JJ, still in buys. So let's go back to gold. So just by throwing a glance at the higher time frame, we realize we have a downtrend and we are in a bearish gold market. So how do you execute on gold? So during the previous live streams, we've talked about our strategy and how we execute. So we only look at the key levels and wait price to move towards the key levels for us to execute. So if price is in between key levels, there's nothing I can do, and that will be trading outside my trading plan. So currently price is at 1922. I'm expecting it to do something like this. So it broke. I need it to retest 1923 for more sells. Else we could get a small scalp below here if price breaks through impulsively. So those are the two trades I'll be looking to execute on gold today. I see absolutely no reason for buys unless technicals align in our favor for buys. There's absolutely no reason for buys on gold, and that will be trading against the trend. So in any case, I'm only taking buys above 1939. So price has to, if it can't dig deeper, it will probably do a pullback towards 1939 for a drop. Okay, so I hope we are on the same page on that. So let's dive to our lower time frames. Let me clear this. So this was yesterday's trade. It hit take profit for 60 pips. And if you trade London, you could have gotten the same trade. So this is what I am currently waiting for. I need gold to approach 1923,500 area. If it can't tap 1923,500 on the dot, I'll be looking to see a shift in market structure. Something. Okay, so this tapped, but in the event we don't get it to 1923,500, we want to see a shift in market structure, then execute here for a drop of more than 100 pips towards the 1912 key level. Okay, so let's sit patient. Let's sit patiently waiting for our setups. Gold needs to make its way to 1923,500. Okay, don't just execute blindly. Watch the price action at 1923,500 plus or minus 10 pips. Then you could get the first take profit at 48 pips and the second take profit at 110 pips. Okay, so this is for gold. For GJ on the lower time frames, I need to see GJ dive down all the way to 182,500. To around 183,100. So this is around 60 pips. So this is the most favorable entry you could get today. Else I'd have to wait for price to come above 182,800 to validate more buys. Okay, so I think I am clear. Any questions, could leave it in the chat. So now we do what we do best, just sit tight and wait for price to come to our areas of interest. So gold almost came to our key level for 20 pips, but that's not within our trading plan. We have to sit tight and wait for price to make its way towards 1923,500 to validate more sells. So price is slowly coming towards our area of interest. So let's monitor price action. If it gives us a signal to enter, we are going to execute. So we are currently not in a trade, just patiently waiting for price action to align in our favor before we can execute. So we want to see price close below 1923 for 500 and hold below. So if it holds below and slowly starts chugging its way down, this will be a valid entry. But if we don't close below 1923 500, we won't enter any trades. Also note that this is the new hourly candle, so just be cautious for your entries because it might make a top wick before it flips and fills this week. So let's drop down to the 1 minute. So let's also monitor GJ. So GJ didn't make its way towards 182,500, but we could get entries above 182,800. As for gold, just be patient, let price action form below 1923,500 to validate more sales. Otherwise, you're still bullish, and one bearish candle doesn't show you that the sellers are ready to enter the market. Just give price time to set up below 1923,500. So we can monitor both of them. So GJ is almost breaking 182,800. So GJ hasn't broken above 182,800. So let's just be patient. So we are not yet in this trade. We're letting price set up and close below 1923,500 for us to execute. So price can still come back into this range and still drop. Let's patiently wait. So we are currently not in any trade because price didn't align with what we were expecting at the 1923 500 key level. As you can see, price impulsively broke and never closed back. So closing back could have been our entry. So let's just wait. So these are just confluences I use to give me more confidence to enter trades. So right now you can see the Japanese yen currency index is forming a small bullish price action. Some of you might place a channel over here. So this is showing me that the yen is gaining strength. So I can be more confident that GJ will make its way to 182,500 before making its way up. This is the British pound currency index. As you can see, the strength of the British pound index has been bullish. Therefore, when you're looking at GJ, you should only look for buy setups until we get changes in the market environment. But for now, you could only get pullback buys and breakout buys. You could also capitalize on these short-term pullbacks for those risky traders. You could sell at the highs, expecting it to do a pullback.
That is so juicy. Wow, incredibly juicy.
So gold broke past the key level, past the medium term zone. Even though we're still holding a bearish bias, gold can do pullbacks that run for 100 pips. So no need to jump on a train that you aren't prepared to take, because if you had pre-planned analysis and your pre-planned analysis was to sell gold, you just can't change bias simply because price didn't go according to your favor. So you could also get sell entries at 1929 500. It all depends on price action. So we just watch what price does, then execute. So right now this one has been invalidated. Let's allow market structure to do its thing, because if you look at the higher time frames, gold has been known to do this. So this is what, so we are currently forming a range from 1923 to 1929. So trading between here is almost like account suicide. So just wait for price to approach these levels, then drop towards the lower time frames where you can get sniper entries. Okay, so there's the push, let it get to 1929 500, then keenly watch the price action. If we get something similar to what happened during the London session, we can capitalize on. For example, we had a double top, then hold the trades towards our key level. So for now, we just have to sit on our hands. Don't take any stupid trades and wait patiently for trades to come to us. These are some of the entries I'd take. Also remember that there is no holy grail in trading, and you can't expect to have 100% wins every day. Just take what the market gives you and call it a day. So these are the two setups that I'm looking to capitalize on. If the market doesn't give me these setups, I'll just call it a day and come back tomorrow for better entries. So now we just wait. So we're getting the impulsive push. So as you can see, this happened during London. We had the push all the way to this key level, then price dropped. And why is this? This is because gold is currently getting into a range. And also we have the CPI for Canada in the next 10 minutes. So the CPI is basically inflation, and when investors look at inflation, the forecast is that the inflation will have reduced. And since Canada are United States neighbors, the Canada's CPI in some way reflects what might go on in the next CPI reading for the US dollar. So you can just focus on that. So depending on what you get today, if there's an increase in inflation, this simply means they're going to increase the interest rates. And when interest rates are increased, the strength of the currency is increased proportionally. Therefore, we're expecting sales on gold. So that's what I'm looking for today. So right now you could see this push might be buy the rumors, sell the news, because investors are pricing in what is expected.
तो खोया रहूं तेरी यादों में तेरी बातों में ना तुझे जाने मैं दूं अपने ख्यालों से ना जाने कितने पल तूने मुझको रुलाया फिर भी मैंने कभी ना छोड़ा तेरा साया बेपनाह दिल को मैंने तो खुद ही संभाला मैं तो खोया रहूं तेरी यादों में तेरी बातों में ना
So
तुझे
for gold
जाने
right now, we need to watch price action, have your eyes glued onto the charts. So the indication that we're going to have sellers jump into the market is if we start seeing smaller and smaller bullish candles followed by bearish candles. So how far away from our key level? We are currently 10 pips from our key level. So depending on what price action does at this level, we could get ourselves earlier today. As you can see for GJ, there was no need to enter trades early. Just had to wait for the pullback all the way to 182,500. Here we come. So price is slowly chugging its way up to 1929,500. Remember, we have to see price action aligning in our favor around the key level before we can execute our sales. There's no need to rush in. If we don't get the setup, we don't get the setup. Absolutely no need for us to force the trade. Remember, we have the card inflation figures in the next 1 minute. Let me clear the charts so that you can carefully study the market structure. So let's see what price wants to do. In 30 seconds, we're going to have the CPI readings for Canada. We shouldn't be in any trade right now. As you can see, we have that drop, so you could get impulsive sales below 1923,500. Let's lock it in. So it's right exactly where they expected it. So if we get readings, economic data reports right on the forecasts, the volume is not so one-sided, because if we had an impulsive break below 1923, we could have capitalized. But since we had it right on the forecast, price might pull back to give us our entry, or price might just range within this area, then we can wait for the break below. So that's just what I'm expecting to happen. On GJ, price is failing to break this one 82,590 area. So let's just clear the charts and watch naked price action. So the bearish move has been engulfed. This might as well been a week. Let's measure this movement. So approximately 30 pips. Not even worth it, because if we get our entries here, we'll be in for twice the number of pips. So let's highlight this as a no trade range. Price is a bit messy in between, so just give it enough time to either come, touch the 1929 500, respect the level, drop, or impulsively break below 1923 500. As for GJ, I would have liked a deeper retest to 182 500, but that's okay. If price breaks above 182 800, we could validate more buys all the way to 183 200. So right now we want GJ to break above this area. So for us to get our entries, let's just make sure this 1 minute candle closes above. So we are still not in, because it closed right at the PPL. But if you get a break above this 1 minute wick at 182 820, so let me highlight that for you, where you could enter your trades and not risk a pullback. So buy above 182 820. So this is what we are watching right now. Let me increase the font size. So yeah, so this is what we'll be looking at. Also, I've realized gold is back to where we expected it. So let's just watch price action to validate ourselves. If it does the same thing it did here, we don't have any trades on gold. So as you can see, we don't have any validation for sales. Just sit on your hands, don't execute on anything till you get a break below 1929.500, and as price holds, we can hold it down to 1923. So for us to validate holding these cells, we don't want to see a 1 minute close above 1929.500. So I'm in this trade at 1929.500. Have your stops above this week at 13 pips. If you get stopped out, that's okay. We already had around 50 pips yesterday on gold and 50 on GJ, so risking 10 pips, 13 pips for 60 pips is a worth it trade. So right now the only way you can manage this trade is if this 1 minute closes above here, you can close out your half your position or a percentage you're comfortable with, then hold the other. So right now the 1 minute didn't close above. If you can clearly see, the 1 minute didn't close above, so I can't manage my trade. I'll just let it do what it does. So let us also look at GJ. We're still waiting for that flip and the break above 182.820. So right now no trades on GJ until we break above 182.820. And we start seeing flat candles at PPL, it's most likely going to do a deeper pullback to 182.500 before it drives. So either one of the two scenarios will execute: a break above 182.820 or a retest to 182.500. Back to gold. So gold, we are still not closing above 1929.500, so our sales are still valid. So my take profit is at 1923.500. So when you get to 20 pips, as usual, we'll close half the trade, then move the other portion of the trade to break even. There's absolutely no reason for you to lose this trade right now. So for scalpers, we are approximately 19 to 20 pips. So if I were you, I'd close there. But if you are an intraday trader, you can just hold it all the way to 1923 till you get any reasons to manage the trade. So till then, I'm still holding this trade. Also for GJ, I've realized GJ has just broken. I had my buy stops exactly at 182, 820, and my stops are just here for approximately 12 pips. And I'm expecting it to drive to 183, 200. So this might be our first loss because we have no other way to manage this trade. So let's just watch price action right now. So if price starts closing below 182,700, you could look to manage your position, but till then, so you can close half your position. No need to lose the whole position trying to hope for price to reverse in your favor. So price is moving towards our stop loss. I'm not yet stopped out. As for gold, I'm still holding my trade since we haven't seen a shift in market structure, and we haven't broken above 1929,500. So I'm just expecting it to drive towards 1923,500. So as gold is doing its thing, you can look at GG. So we haven't been stopped out, at least not yet. Let me not jinx the trade. So gold is doing its thing. The only way I'm looking to manage this gold sell is if we start. So this was our analysis. Close below 1929,500 for sales to drive to 1923,500. So we are done with that. Still in the trade, and now we want to talk about how we are going to manage this trade. So in the event price starts to close above here, I'm looking to close the full position because this indicates that price is bound to do a deeper pullback before driving its way down. Okay, so right now I have no means to manage this trade. I'll just let it rock and watch how it reacts to these levels. So we are currently up 30 pips, so you can close full depending on the parameters you've set in place to manage your risk. Personally, I like to lock it in at 30 pips, so I'll just move my stop loss into profit. My stop loss is at 1926.50. So let me 1926. So my stops are in profit here, and I can let the rest of the trade move towards take profit. Also for GJ, we weren't stopped out and price moved back up the range, so let's patiently wait for it to make its way towards 183.200. Let's look at gold. Gold is still doing its deep dive. I'm looking to lock it in at 45 pips, so I'm moving my stop loss to 1925.50. So my stop loss now is at 1925.5. Where's 5? 50. And I'm letting the rest of the trade rock. So if it moves back and stop me out, it will have stopped me out at 40 pips. So this is a risk-free trade. So price is dropping beautifully. So I'm looking to move my stop loss to 1924.50. I've locked in 50 pips. So if I get stopped out, I'm stopped out exactly at 50 pips. Anything else is just extra from this point. So we have 10 pips to go and I am stopped out. Yeah, so we did it. So 50 pips for gold today. We've already locked that in. So you can move back to GJ and monitor what GJ is doing. So you're still not impulsively breaking 182.800, and in the event we drive and break this area, I'll close my full trade at minus 9 pips. Yeah. So that's just the way I'm looking to manage that trade. So I think for this week we are already up around, so yesterday was Monday, we had 50 pips on or 60 pips on gold, 50 pips on GJ, that was 110 pips, plus today's gold trade 50 pips, so we are up on 60 pips. So depending on how this GJ trade will go, we're looking to close at least 2 days into the week. We're already up 160 pips. I think that's realistic approach to how you would trade. So just make sure you have small stop losses, then your risk to reward is above 1 to 2, such that it can always shadow your losses. So if price holds above 182, 820, I'm expecting it to drive all the way to 183, 200. If not, in the next 5 minutes, I'll close the trade and end the stream. So we'll have a minus 9 pip loss. So depending on if you entered the gold trade and where you managed. So personally, I bagged 50 pips, so 50 minus 9, I'll have closed the day at 41 pips. So we're still in this GJ trade. Also, if you have any questions, you can leave it in the chat. Leave a like, subscribe. We have the New York live stream sessions from Monday to Friday, all for free. So we have 3 minutes to see where price will close at. If it closes below 182, 800, on a personal level, I'll just close the trades and call it a day, because this will be a messy range to trade in, and you are going to most likely overtrade because price will keep hitting your stop loss and you re-enter. So as we are waiting for DJ to do its thing, if you have any topic you'd want me to talk about, maybe any psychology questions, technical questions, fundamental questions, I'm more than ready to give you an answer. So I think our stops are going to be hit for 9 pips. It's not over till it's over. So price hasn't stopped us out yet. Still dancing within this range. So for those who have watched me since I began the streams last week, you've seen how well I manage the trades and how easy risk management is. So risk management while day trading is simply just the act of supervising your capital in the financial markets. You always want to protect capital so that you can live another day to trade, because if you lose your accounts today, the market will always be there tomorrow, but your account won't. So that's just on risk management. You enter your capital into the market, so you have to protect your capital, gain profit, keep the profit, manage the losses, and more. So without active logical risk management, it is almost impossible to be a successful trader or investor, since the inevitable human emotions will get exploited. So for example, if I was still in my beginner years, I'd probably have closed this trade, entered on the next candle, closed this trade, entered on the next candle. But if you understand you have a good risk management strategy in place, such movements don't phase you because you have active logical risk management. So once you first have a strong foundation of the understanding the risk involved in trading and the financial markets, you should actually know what you are involved in. Then and only then you can build there to potentially be looking at opportunities to profit. Right now I don't have any questions you guys are asking, and I'm almost talking to myself. But till I get a question, we can just talk and manage this trade. So we are up 10 pips. So the scalpers in the chart, you can close your trades at 10 pips. The intraday traders, you can look to hold it to 183.200. So in trading, you must have goals that are bigger than your short-term emotions. And once you have the goals, a plan must be created around these goals with the financial risk management integrated with this plan. So this allows you to better control your emotions and keep in mind that the market is all probabilities, numbers, and psychology. So right now, I'll move my stop loss to break even, because if price comes back to tap 182.800, it will most likely do a deeper pullback, and I am content with the profit that I have gotten today. It's all about controlling your emotions actively, because emotions will always be there for manual traders, but having a long-term vision which is broken down into logical, actionable plans, having risk management on your side heavily increases your probability of success. So it's best to focus on a high risk versus reward ratio, which allows more room for human error and realistic expectations. That's why most of the times I have more than a 1 to 3, 1 to 4 risk to reward. This is because it gives me room for error, human error. So for example, let me give you an example. So normally I have a 1 to 4 risk to reward. One to 4 risk to reward. In the span of 100 trades, I'm trying to let me calculate it on my phone. So in the span of 100 trades, say you have 50% win rate. $50 trades at, so for example, say you're using a 1 lot for each and every trade. So for 50 trades, that means you have, I didn't realize how difficult this calculation is going to be. So 1 to 4 risk to reward, 1 lot, and my stops are usually between 10 to 15 pips stop loss. So for easier math, let's use 10 as our stop loss and take profit 40. So 50 trades times the 40 pips, this is going to give you, I think this is 2000 pips, right? $2,000 pips, and the 50 trades that you lost, so if you lost 50 trades at 10 pips, this is simply 500 pips. So by the end of 100 trades, using this risk to reward of 1 to 4 and having a 50% win rate, this is almost a worst case scenario, because most of the time when your fundamentals align with the technicals, you'll have a win rate of above 70%. So this is worst case scenario, you have a 50% win rate, so you have 1500 pips. And if you are using a 1 lot, so a 1 lot 10 pips equals to $100. So this will be $15,000. So you can see having a better risk to reward ratio actually accounts for having a lower win rate. I assure you can reduce this to 25, but you'll still be profitable. So it gives you more leeway. It gives you more breathing room for your trades to cook. And since human emotions are bound to get into your trading, you might take emotional losses, and those emotional losses will be covered by your risk to reward. So I think that's it on risk management. You can screenshot this or whatever you want to do, you can write it down. So that's it on risk management, because if you chase a higher strike and win rate and hit an inevitable loss, there's a higher probability emotions will come into play and your risk management will be thrown out of the window. Because if you want to always get winning trades and have like 80 to 90% win ratio, that's actually stressful psychologically, because once you hit one loss, it will be detrimental and you're most likely going to try to revenge trade, and revenge trading is also detrimental to your account. Therefore, focusing on a positive risk versus reward ratio is more realistic and applicable, but it's not as visually appealing or satisfying for your ego. You should always look to accept your losses. Take the losses, even if it's 10 losses in a row, just take the 10 losses in a row, rather than forcing yourself to have a positive risk to reward ratio, rather than having a high win rate. So the win rate is not important when you have risk to reward to cover up for you. You could also focus on a 1 to 3 risk to reward, and in a stretch of 10 trades you can lose 5 trades and still be profitable. So this puts more focus on the probability of trading, less pressure to perform, and allows room for error and more logic. I think I've done my best to explain why I prefer a positive risk to reward ratio. I'm still holding my GJ buys. Let's watch closely what price wants to do at 183 flat, because the 183 flat level is a higher time frame price sensitivity area. Depending on whether it breaks impulsively or starts to range, I might close my trades at 10 pips.
Say I'm good,
If you have any questions, leave it in the comment section. Right now, GJ is slowly chugging its way up towards 183. So if it fails to break 183, we can all close our trades at 10 pips, 182, 922. So let's just actively watch price action. So for gold, what happened today? We had our pre-planned analysis to sell at 1929,500, and with the New York volume, price drove down and we trailed our stop loss and expected price to hit 1923,500 and had our stops at 50 pips in profit, but price reversed and stopped us in 50 pips profit. But for re-entries, personally I wouldn't want to enter right now because we have low volume and we are moving towards the close of sessions. I like moves like this happening during New York opens, or you could wait for volume during London close. But right now I'm not looking for anything on gold. The market is giving me enough pips. I can call it a day on gold and manage my trades on GJ. Everything was called out live. You can rewind and see our analysis as it played out. So right now I've just moved my stop loss to 182, 917. Because if price breaks that area, it will most likely come back to stop me out at break even, and I'd rather take home 10 pips than break even.
Messing with my head again. You had your heart set on me, but these feels they come and go, and they come so easily.
So price almost came to stop me out within, I was almost a pip away from getting stopped out. So patiently. So this is the third time. If it fails to break 183, I'm closing the full trade and calling it a day. My stop loss is at 182. Okay. So if price has to do only two things, either break above 183 or break below 917, then I'll be out of the trade. Okay, so I'm out of the trade at 10 pips. For those who are still holding, I'd have my stop loss to break even, because GJ, if it fails to break the highs, it is most likely going to do a deeper pullback towards 182,500. I can't imagine it stopping me out then shooting up above 183. But that's just another day in the markets. No need to get greedy. So as I finalize, any questions are welcome in the chat. So leave a like and subscribe. See you tomorrow, same place, same time.